Ladies and gentlemen of the crypto space, we're live on a Wednesday, March 9th at 11:32 a.m. And folks, do you remember up-only markets? What kind of market are we playing? What is this? People are getting 20% rips to the upside and boom, it gets hammered. It's basically dead cat bounce after dead cat bounce. Well, look at the charts. The charts speak this all over. It is written all over the charts. And it's something that people are allocating capital to. Uh, this is not the time to be allocating capital. This is the time to understand that the market right now is not up only. We had a 2-year period of up only, and people are trying to allocate to a market where predators lurk and scavengers lurk. It's not going to go up only. There's not higher high after higher high and higher low after higher low. That's a wonderful market to participate in. There's no higher highs on the damn charts. What are people allocating capital to in this market? The appropriate thing to do in this market is to have a structured portfolio, meaning you just went through 2 years of asymmetric appreciation. Maybe you got 10, 15, 20x on your dollars, and you have more in assets. So you have a structured portfolio that has part carved out in dollar form, in stablecoin form. That's up 10, 15, 20x over the course of a year or two. Come on, you got hedge funds fighting over 15% return on the money for the year. They're like, oh my God, they got 20% return on the money. In the last 2 years, most folks that started in 2020 have got 1,000, 2, 3, 4,000%, 10,000% if you're lucky on dollar cash. And then you have another couple thousand% on assets. Have a structured portfolio in this market and be patient. Be patient. I mean, seriously, you guys are playing this market. Folks are playing this market when we just had this market. So why folks choosing the hard market, and why not just wait for the easy market? We had easy markets in 17. It was an easy market, week after week after week of appreciation. I don't know how else to say it other than uh, it's obviously fear of not owning something. Folks need to own things, and they're like, "What do I buy? What do I buy? I have to buy this. Is it a good time to buy this? Oh, what if I'm making a mistake? If I don't buy it and it goes up, that's worse. That's horrible." Patience. You know who has the most patience in the history of capital allocation? Warren Buffett. He waits for discounts and he buys a discount. Do you think Bitcoin is going to all of a sudden be $95,000 next week and you're going to miss out because something dramatic is going to happen and you didn't have your position? I just see liquidity issues and commodities price inflation all over the place, and the ripple effects take time to circulate throughout the infrastructure and enterprise, and the cascading uh, insolvency is inevitable if commodities prices are this high. How do businesses operate at 100 plus, 120? Folks are saying $150 a barrel oil. How does it work? It doesn't work. You're not shipping, you're not transporting. Prices of goods and services double. Whole system will start to convulse. And you'll see that in the bond markets. As folks will take risk off. That's the dollar. Maybe you see the dollar rip out. The dollar was over 99. It still has yet to break out. Maybe you see a massive candle to the upside, 103, 104, 105, 110, where the whole system, the international fiat, gets crushed when the dollar is bullish. And obviously the DXY is predominantly euros, denominated in euros. So if the euro gets crushed, the dollar breaks out. Gold looks good. It's nice to have a position in gold, hovering around 2,000. Still fat cup and handle for the last 10 years. And you follow Lou Groman, and he says the whole system gets redenominated, and maybe oil priced in gold from Russia, and they have a large amount of oil. If they start pricing their oil in gold, that changes everything. Significantly changes everything. So, you have 10, 15, 20 ounces of gold. They go to $100,000 an ounce. It's not bad having $2 million worth of gold. And you can have it with Pax Gold, or was it TAUXAUT, which is Tether Gold. And there's limit orders, so this Maca is pretty cool. It's a zero access platform, and they have nice limit order system. Very convenient how they price it, so it's very easy to take positions, and you're able to, find hopefully an opportunistic entry. And there's no gas; it's free. For so many folks complained over the years of Ethereum high gas costs. Meanwhile, limit orders are free, so there's no gas cost. It's just the systems that have been built are just not used. People really don't understand what they're doing, why they're doing it, or how they're doing it, and we should be able to do better. Um, Solid's still an interesting play over the next couple weeks. This is a fat head and shoulders. This doesn't look so hot from a technical perspective, and obviously it's been crushed in price point where it was flying the first week. So this is a very mission critical to have an appropriate size position. 1% to 10% changes everything. And an excessively sized position crushes a portfolio. You throw 50%, 75% of a portfolio into an asset and it gets crushed 90%, you just lost all your money. So it's imperative to have that kind of risk consideration, that risk management strategy. And this is exactly why it's imperative to have a well-structured portfolio where the vast majority of capital is a risk-off position, because we're going to have insolvencies that'll cascade throughout the system. How is that not possible? How is that not possible? And believe me, I talk all this bearishness, but I'm about, 45, 50% exposed to assets that I think have that kind of outperformance to the downside, and will have that longevity and are entrenched and have some kind of mode or another. But when something rips and dips to the downside, I'm going to be the one that's around to buy the dip because I have optionality. You can't buy shit. You can't do anything unless you got cash. Can't do anything. So just remember that, and just food for thought. In a time where it's not up only. Look at this chart. For weeks on weeks on weeks, Bitcoin was just up only. Did you know Bitcoin ripped 20x? 20x, 2,000% on the money from March 2020 to its top at 60 and change, 63,000. I mean, that's crazy. When this market does likely what it's going to do, you're not going to have to play other assets. You'll be able to play just Bitcoin and get 2,000% of the money. Believe me, you turn 10 grand into 200 grand, that changes everything. Or 200 grand into $4 million, that changes everything. So 20x is a massive number. There's too much risk on. People are playing these markets like it's a normal market, and predators are out and they're going to take your money. So have a well-structured portfolio, show a little bit of due diligence and patience and prudence, and you'll have that cash available when the discounts emerge. Now, bear in mind, that's why you still have assets. So you have a structured portfolio. What percentage of the portfolio is deployed to assets? What percentage of the portfolio is liquidity, stables? That's going to be subjective, but it's very important to be thinking of these things. What's the balance of the portfolio, risk on and risk off? Because if you're 100% in assets and you have a massive solvency event, and Bitcoin takes a dip to 20 grand, your altcoins are going to go down 95%. You're going to lose all your money. So just remember that. Raul's in the house, Tower K, holding for the opportunity. That's right. Prophetic poet, preach it. James, good morning, amigo. Daniel, yo, 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 yo. Grumpy Miner, Poncio. Because we need now the hardest money on earth more than ever. Yeah, these are great narratives. I appreciate these narratives, but the hardest money on earth doesn't mean it's not going to get sold hand over fist. If it's not paying you, it's going to get sold hand over fist, especially if shit hits the fan and you get serious dollar bullishness. You got to remember dollars are extremely disinflationary. They're extremely short in supply from a global perspective. So the potential for dollars to significantly outperform is enormous. Enormous pressure on the dollar uh, price point relative to other fiat. And when the dollar rips, everything else is like, what the heck is going on? And it ends up just getting sold. And it gets sold quick and it gets sold hard. Um, Jordan's in the house. Poncio is a good time to buy BTC, not Ponzi's. I would say no, but I think the appropriate thing to do is to wait and have patience. And when a discount emerges, everyone's screaming, "Oh, is it going to stop going down?" That's because you're in position. When you see Bitcoin, when you see Bitcoin doing this, not that. When you see Bitcoin doing this wick down to 3,000, and you're in position, it's painful. When you're not in position and you got cash, you're like, whoa, whoa, buying opportunity. Discounts emerge. You can't do shit unless you have cash. It's a good time to capital flows from impatient to patient. That's right. So look, there's the perfect example. The impatient are buying now. You gotta buy, gotta buy, gotta buy. What do I gotta buy? What's the opportunity? Where's the 2,000% yield? Buy, 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 buy. Or the patient where, oh my God, everything's dumping, dumping, dumping. All right, I'll take that for $3,700. Oh, and it rips to $60,000. Quick 20x on the money. That's right. One curious view. Liv W's in the house. Hi Noah. Good morning. Hope you're doing okay. I'm okay. I'm quite sick right now. I was totally incapacitated this morning, but I'm hanging in there. Soon, good morning, Liv W. CPI print tomorrow, though it isn't for this month. Should be good for the market. We'll see. We shall see. We the crypto people. Noah, what do I do with my lock solid? There's nothing to do with it. And you wait until one of the three uh, groups of developers finish the second layer bribe system. My interest is with Deuce. I think Lafa has a hell of a mind and his Medium articles, and I'm looking forward to his white paper with regard to his synthetic assets. And I'm quite surprised that I haven't known about his technological software capabilities. I'm quite impressed. Um, that's it. So of the solutions like Solid Sex, and 0xDAO and eDAO, I really like what Love has done, and I like what Deuce has done, and I think the market does as well. If you go over to Solid and you go to the vote tab, oh, how do you like that? They're at the top. They have the most votes. So I think the market likes it as well. Interesting. Um, One curious view. Does tokenized gold make sense to you? XAUT and PAXG, not your custody, not your gold. Yeah, I pretty much prefer synthetic assets, like synthetics, the protocol, and what Deuce does, and those types of protocols. But a little something in PAXG can't hurt, in my opinion, and that's a position that I took. It was a small position. Quantified. Hey, Noah, wondering your thoughts about the executive order from the White House. We'll see. Basically, the entire order is you guys have 200 days to do something, to write a paper. And basically, that is what the entire executive order is. It tells the entire government to stop waiting and start doing. So that's going to be quite interesting to see later this year. Gail's in the house. George, hey man, that's something I need to work on. When we were in up only mode, I had thought to build a cash position many times, but was thinking of I'll be missing out on a lot of gains and FOMO back in. My friend, don't measure from the top, measure from the bottom. So many folks. I mean, come on, we probably folks were up. I was up 10,000% at one point. I'm not up that anymore. That's okay. You never could run it perfect, but you'll do better next time. And it's not easy to sell when markets are bullish, and you never know when tops are, and you know when bottoms are. When the system falls out and the Fed says, yeah, we're coming in with four-letter acronyms and $20 trillion of intervention and fiscal stimulus, and Congress passes a bill. That was your bottom. So bottoms are actually much easier than tops. The top really was started when the talk of QT happened and rate raises, and it's quite clear. It was like December of 21, and now we're here. So but it took time. It took a couple months for that narrative that the Fed was putting out to really start to crush markets. But the bottoms are a little bit easier with regard to interventionism. Interventionism changes everything. These aren't free markets. You know where the tops are, you know where the bottoms are, and my sense is that we're going to have decreased periodic cycles. So the rate cycle has been neutered. I don't see how they're going to raise rates at all. So they're not really 4-year cycles the way Bitcoin. Everyone talked about Bitcoin 4-year cycles. I expect them to be shorter. And there's a lot of macro reasons why that's the case. Was it 4-year cycles for Bitcoin, or was it rate cycles? Was it something else part of the macroeconomic landscape? Um, Daniel took profit for the first time to have optionality. Is it normal to feel weird about that? Yes, it is, because you're not exposed to a market that you have a high opinion of. But what do you do if you don't have optionality? When the market takes a shit, everything's down 50%, and you're in it, and you can't make a choice. You can't buy something because you don't have any cash. So a portion of your portfolio needs to be in a form that could take advantage, have optionality in a time of discounts. That's how you have to do it. LQDR has bought stable pool. You can park your fracs. I don't. I've opted for GUSD. So GUSD, I have a capacity to transfer immediately to Gemini and extract to a bank account. I don't know. That just gives me the most comfort. Um, that's very interesting, though. If I could find like a Frax position. Of the stable coins, I have the highest opinions of Frax. I like MIM. I like UST. They have a massive treasury backstop at this point. And I think, as I've talked about for the last year, the stablecoin narrative. The stablecoins are completely underestimated. I think CDP stablecoins are very meaningful and comparable to Eurodollars in so many regards. But ultimately, the algorithmic stablecoins probably had the most promise going forward, which is a Frax and a UST. And I mean, Mai's on the list with as a CDP stable. There's a bunch. It's a bunch on the list. If I held CVX FXX on the FBI snapshot date, but have since sold, yeah, you'll still get your airdrop. The snapshot was taken. W, are you aware of Excalibur exchange on Phantom? They're trying to bring more UST liquidity to Phantom. Pretty cool. We'll see what happens. We'll see. We'll see. It's amazing. No one speaks of Ren these days. Catalog anyone? Yeah, it's a big deal. But you got to remember, with myself, I've had those positions since February of 2020, late February, March of 2020, during ChaosNet. So they're just there. And if it goes big, it goes big. That's a passive position. I'm very content. It's still up like 10x from entries. It's all good. From a technology standpoint, everything you know is exactly what I appreciate. It could be a big deal. Ren is an L1 and his capacity for cross-chain interoperability, asset exchange, but that's just the tip of the iceberg with regard to what a distributed network of servers has the capacity to do from a functionality standpoint. That's just a profound platform from a technology standpoint. Obviously, there's the whole opportunity cost perspective. It's not that lucrative, and but that's besides the point. Listen, if you're buying like gold, and gold does jack shit. It doesn't do anything. If you buy in stablecoins, they do jack shit. So there's other stuff that does not as much necessarily. It's not incredibly lucrative, but there's a reason you buy it. There's a reason. And always remember that reason. And that's how you structure a portfolio, not on hopes and dreams of, oh, I'm gonna hodl this and it's gonna go up. Why is it gonna go up? Because everyone else is gonna hodl it. No, no, damn it. No. You gotta have reasons. Dinner table investing, boys and girls, you gotta be able to talk about why you've done what you've done. And it doesn't necessarily matter if other people understand you or not. What's pertinent is that you understand why the heck you've done what you've done. And that's how you structure a portfolio. We getting that third drive down on curve cap. Let's take a look. So I would really like a curve position. Folks are like, oh, the yields are down on the LP positions. And I'm like, yeah, they're getting diluted. I mean, if you get 1, 2, 3, 4, 5% on stables, I mean, compare that to like minus 5% in bank accounts or whatever the heck the real rate of return is on bank accounts around the world. So it's a big deal. 220. I was watching it at 2 and change, about $1.98, 2. Um, well, we'll see. I mean, macro conditions are screaming for like a solvency event, as Raul would talk about it. I mean, commodities prices ripping like this has to be blowing out balance sheets, blowing out business operations, and creating insolvency. That's by definition what it does. If companies can no longer afford to purchase their raw materials because they're too expensive, and it just destabilizes the entire business operation. And that's something that takes time to propagate through the system. I mean, wheat prices. I mean, Ukraine literally just announced today they're not exporting wheat. I mean, this is going to crush the European Union between the exports of Russia and Ukraine, and there's going to be no crops and no harvest this year in Ukraine. It's crazy. What's going to happen in European Union? Where do you think a good part of all their materials and resources comes from? Russia and Ukraine. Um, this is going to change everything, and it's going to be disruptive, and it's not going to be orderly. So for myself, you need significant optionality when the shit hits the fan. Um, exactly quantified. Oh, it's a hot mess. It's a hot mess. All right. Yeah, I saw Raul's macro update quantified. Three potential scenarios. Yeah, yeah. His mind works very well. I myself look for base case, best case, and worst case as well. And his three scenarios are completely rational. I like the way his mind thinks as well. Um, I mean, they're all three are bad. Some are better than worse. But it really, independent of the three scenarios, you still have the prices. The demand on these commodities has created these highly inflationary price points, and that has the ripple effects that are obvious, which is completely independent from any resolution that could play out with regard to Ukraine v. Russia. Um, Financially and economically. I mean, literally, just the weaponization of the dollar is going to drive every damn country around the world to figure out how the hell they could operate without dollars, and also how they could operate if their internationally held reserves are seized or access is restricted. I mean, this changes everything. Now, all of a sudden, everyone's repatriating their reserves. They're figuring out how to operate financially, not so dependent on the dollar, so they're restructuring economics. It's going to take time. It's going to take years for repatriation of supply chain, but they're probably all thinking about that. And I believe China just turned off some exports as well, and everyone's going to be hoarding natural resources. It's going to be competitive, and this is basically just going to disrupt the entire global financial system to the point where you'll have insolvencies, you'll have massive bankruptcies, and you'll have a cascade throughout the entire system. And that's the type of opportunity I want to take advantage of. Strengthen the bones of the people, weaken their will, and fill their bellies. Lao Tzu said one of the best ways to govern. Yeah, that means you're in control, and you're giving them what you need, what they need, and that means you have just totalitarian control. Well said. Chinese said food security priority number one. I mean, come on. If food security is priority number one, they're not exporting anything. This changes the entire global dynamic of natural resources and commodities. And what happens if they shut down exports of trade? And they're like, yeah, we need the technology. We need the productive capacity. Now, literally, I mean, come on. You're not getting an iPhone next year if it's not made in China. So there that goes. And there goes Apple. And there goes the stock market. And the stock market um, drags down the crypto space, and the stock market collapses pension funds, and all that horrible, disturbing ripple effect that is pretty much very obvious to likely occur. So we want to be prepared for it. I'm going to wrap it up today. I don't feel so hot. I thank you all for joining me. 58 people in the stream, 21 likes. We can do just a little bit better. I got a couple of calls today, but feel welcome to throw something up in the calendar, noahseidman.com. It's in my Twitter profile, and I'm more than happy to help you guys through these difficult times. As always, after party on Discord with the most rational community in the entire crypto space. I wish you all a wonderful day. I'm going to see you again on Friday. Peace.